Now, as many of you already know, that the Pick n Pay is on a road to raise 4 billion rands to rescue their business. We just read that Pick n Pay is going to issue over 252 new shares to the existing 493 shares which they've issued in the market. So now when you see, or when you compare these 252 new shares against that which they've already issued or that are currently in the market, you will notice that it therefore means that Pick n Pay is introducing a 51% share dilution. So shares of Pick n Pay are going to be diluted by over 51%, which I must say, this is not good. I mean, yes, we know that Pick n Pay, these 4 billion which they are raising, they want to settle some of their debts which they are in. But yeah, man, a 50% share dilution, it is not many times that we see such a huge dilution being brought to the market. But I suppose Pick n Pay's plans will be able to validate this. They can use the money wisely and make sure that Pick n Pay goes back to profitability, generating some good revenues to the existing shareholders. So this simply means that for every 100 shares of Pick n Pay you own, you will have to buy 51 more shares to accept this 51% dilution we are talking about. So the more shares you own, the more, of course, shares you will have to buy that will be constituting to this 51% share dilution that Pick n Pay just recently announced. So as I've said, Pick n Pay is doing all this to make sure that they implement a turnaround strategy for the company, which includes them paying off some of their debts and also restructuring the company. I mean, Pick n Pay has been on a road to change management positions as one of the strategies they are using to make sure that they bring a turnaround into this company. Now, one of the things that I said when I was talking the rights offer, or when I first spoke about the rights offer that Pick n Pay is issuing, I did say that the kind of problems, the kind of issues that Pick n Pay is facing, it is not the similar situation to some of the companies that are in the same industry are facing. I mean, ShorePride, it is a company that is doing exceptionally well, and it shows you that whatever they are implementing, their strategies are working. And ShorePride, it is for that reason that even their share price, it's trading at an almost all-time high, whereas the shares of Pick n Pay in the past year alone, they've went down by around 33%. Whereas in the past 5 years, the shares have went down over 65%. And at least I think one of the things that encourage investors to stay on a stock is to see growing fundamentals, or seeing the improvement in terms of finance that the company is implementing, of things that they are implementing which are resulting into more revenues. And unfortunately, as it stands onto Pick n Pay, things are not looking good, things are not going as good. And for Pick n Pay to gain more shareholders, or to keep the kind of shareholders they have, they need to make sure that the turnaround strategy which they want to implement, it bears fruit in the near future. Because if it does not, the stock price unfortunately is going to tank more, because a lot of investors are going to lose interest into these companies. So 252 million shares is what Pick n Pay is going to offer on this new rights offer which they have been talking about, which will bring a turnaround into the whole business. But one thing for sure is that if indeed Pick n Pay is to see, of course, a good turnaround of the entire business, then those that are buying or taking this rights offer will definitely be rewarded. I think in the previous video I have said that companies like Sun International, they've issued rights offer which it has proven that rights offers can be quite good, because during the pandemic, when a company like Sun International issued the same rights offer, they were raising, I think, around 1.2 billion rands, which resulted in them giving shareholders to be able to buy Sun International shares by, I think, around 8 rands, or plus minus 8 to 10 rands per share. And looking at where Sun International is right now, I think you and me can agree that if those people that bought the the Sun International rights offer back in 2020, if they are still keeping those shares which they bought right now, they should be sitting over 200% in terms of the growth which they have seen on the shares they bought during the rights offer, which simply means that even for Pick and Pay, yes, to some others this might be a very bad strategy, but if Pick and Pay really turns around this business, this could be a great thing to those that purchase the Pick and Pay rights issues, or the Pick and Pay 252 million new shares which they are going to offer to the existing shareholders. So this rights offer that Pick and Pay is offering to the existing shareholders will present a 32% discount from the over 27 rands per share we saw Pick and Pay closing trading at on Wednesday, which of course it means that Pick and Pay shareholders will be able, or on this rights offer, they will be buying these new offered shares by around 15 rands and 86 cents, and that is 32% from the over 27 rands per share we saw Pick and Pay shares trading at during Wednesday. One thing that we have seen from the other companies that do offer this rights offer, we have seen after the rights offer announcement, stock price tanking towards or close to the, of course, the price which they are offering the rights offer to their existing shareholders. So which for Pick and Pay, do I think it's gonna, the share price will go to 15 rands and 83 cents? I'm not sure, but if the share price goes there, then it won't be so encouraging to those that have to acquire the new 252 million shares which Pick and Pay is introducing or adding to the existing 400 or over 493 million shares which Pick and Pay has issued to the market. So yeah, we look forward to the turnaround strategy. We look forward to the 4 billion rands that Pick and Pay wants to raise. I think yeah, I wish them well, and those that are holding this company, that are investing onto Pick and Pay, I wish they can see some good gains in the near future based on the maybe turnaround strategies that Pick and Pay would have implemented from the 4 billion rands which they are going to raise during this rise offer. Otherwise, that's all from me. Do your own due diligence before you buy any stock. Invest into the stock market, because if you just buy because someone else told you to buy, then unfortunately when you see share falls, or when you see the share price of that company dropping, you might get to panic sell. Guarantee that company is going to maybe surge by 20, 30, 50% in the next 6 months, and you are definitely going to regret why you sold, which is why it's important for you to do some due diligence before you hit that sell button onto a stock. I mean, personally, had I not sold my Sun International shares, which I've bought again after the rights offer they gave to us during the pandemic in 2020, I would be sitting over 200% onto the stock, which is something that, of course, it's a lesson learned to me to say that no matter what happens, if the company's fundamentals are growing, you keep that stock. You don't sell, because in the long term you will win. I mean, I've been back, or I've been owning Sun International once again from I think 2022, which, yeah man, I'm not selling this company, because the more the fundamentals grow, the more, of course, the revenue this company is going to generate, which will result in the share price of the company also growing. Otherwise, that's all from me. Do your own DD, and God bless you all.